if you only had $1 million today, you could generate 50% returns.
Managing $1 million is an entirely different game than running Berkshire Hathaway or running some $20 or $50 billion fund of money. And if Charlie and I were running $1 million now, or 100,000, or we would be looking in some, we'd be looking at probably some very small things. We would be looking for small discrepancies in certain situations, and the opportunities are out there, and periodically they're extraordinary. But that's something we really don't think about anymore, because our problem is handling 12 or 14 billion or whatever it might be coming in every year, and that means we have to be looking for very big deals and forget about what we used to do when we were very young. Charlie?
Yeah, I'm glad I'm through with that particular problem.
He worked pretty hard at it when
yes,
we both did.
Did we ever?
Yeah. We looked under a lot of rocks, and
I used to make big returns on my float on my own income taxes. Between the time I got the money and I paid it to the government, I frequently made enough money to pay the tax. But I was working for small amounts of money and doing anomalous things.
He didn't tell me how to do it, though. Okay, station 10.
Hi, Warren and Charlie. This is Andy Ling from Shanghai, China. Thank you very much for what you have said and what you have done. People around the globe has benefited a lot from your philosophies. So you have fans, even a lot of fans, even in China. My question is, how did you see investments in emerging markets? Will Berkshire expand its investments in places like China? If yes, what kind of industries and companies you are interested in? Thank you.
Yeah, we don't really start out looking to either emerging markets or specific countries or anything of the sort. We may find things, as we go around, but it isn't like Charlie and I talk in the morning and we say, it's a particularly good idea to invest in Brazil or India or China or whatever it may be. We've never had a conversation like that, have we, Charlie? No. And it just won't happen. We don't think that's where our strength is. And we know that our strength is not there. And we think probably most people's strength isn't there either. I mean, it sounds good, but I don't really think it's the best way to look at investments. If you told me that we could only invest, we're perfectly willing to do it. We owned a lot of PetroChina at one time. We own some BYD now. We've owned securities outside the United States and will continue to. But if you told us that we could only invest in the United States the rest of our lives, we would not regard that as a huge hardship, would we, Charlie?
Yeah, it's a great way to sell an investment advice, to have a whole lot of different categories, lots of commissions, lots of advice, lots of action. And a lot of things we don't feel we've got enough of an edge so that we want to play.
Yeah, when we hear somebody talking concepts of any sort, including country by country concepts or whatever it might be, we tend to think that they're probably going to do better at selling than at investing. And, it's just such an easy way. I mean, it's what people expect to hear when somebody comes calling. That today we think that you ought to be looking at this or that around the world. The thing to do is just find a good business at an attractive price.
Yeah,
and buy
our experts really like Bolivia. And you say, well, but last year you liked Sri Lanka. And it's just, we're not comfortable with that.
Yeah. And we usually think it's a lot of baloney, but
that's why we're not comfortable.
Okay, station 11.
If I'm in my 20s and I'm starting a partnership, what advice do you have about getting people to put in money before I have a track record as a solo investor?
Well, you haven't sold me. The- no, I don't. I think people should be quite cautious about investing money with other people, even when they have a track record. Incidentally, there are a lot of track records that don't mean much. But overall, I would advise any young person that wants to manage money and wants to attract money later on to start developing an audited track record as early as they can. I mean, it was far from the sole reason that we hired Todd and Ted, but we certainly looked at their record. And we looked at a record that we both believed and could understand, because we see a lot of records that we don't really think mean much. I mean, if you get, if you have a coin flipping contest, as I wrote, some years ago, and you get 310 million orangutans out there, and they all flip coins, and they flip them 10 times, you will, instead of having 300 million left, you'll have 300,000 roughly left that'll flip 10 times in a row successfully. And those orangutans will probably go around trying to attract a lot of money to back them in future coin flipping contests. But so it's our job when we hire somebody to manage money to figure out whether they've been lucky coin flippers or whether they really know what they're doing.
When you had his problem, didn't you scrape together about $100,000 from a loving family?
Yeah, well, I hope they kept loving me after they gave me the money. That was the well, it was very slow, and it should have been very slow. As Charlie has pointed out, some people thought I was running a Ponzi scheme probably there, and other people may not have thought it, but they thought it was to their advantage to sort of scare people because they were selling investments in Omaha. But to attract money, you should deserve money, and you should develop a record over time that does it, and then you should be able to explain to people why that record is a product of sound thinking rather than simply being in tune with the trend or simply just being lucky. Charlie? You're starting today and you're 25 years old. How do you attract money?
Friends and family, or people whose trust they've already earned in some other way. So it's hard to do when you're young, and that's why people start so small.
And a relatively few will be successful.
That's right, too.
Yeah. A great many will be successful and make, I mean, we had the hedge fund record here, and during that time, the hedge fund managers have probably made a very considerable amount of money. As I pointed out, Todd and Ted, working under a 2 and 20 arrangement, if they put the money in a hole in the ground, would make $120 million each this year. So it's not exactly an arrangement that you don't want to think about a little bit before you engage in it.
The arithmetic attracts many of the wrong sort of people.
Naturally, we thought we were exceptions.
Yes.